is still unknown. Bitcoin is a speculative mania, according to the governor of the Reserve Bank of Australia. But it's not so easy to say that Bitcoin is a bubble. We don't know how to value it. Recent price rises may be too great and can't continue. But the Bitcoin market is only just maturing as an investment and as a currency, and so it may still have room to grow. A bubble is when the price of an asset diverges from its fundamentals, the aspects of an asset that investors use to value it. These could be the income that can be earned from a stock over time, a company's cash flow, the state of a country's economy, or even the rent from property. But Bitcoin does not pay out profits or rent and is not attached to the national economy. This is part of the reason why it is hard to tell what the underlying value of Bitcoin is or should be. In the search for fundamentals, some have suggested we should look at the supply of Bitcoins in the market, the number of Bitcoin transactions through the market, or even the energy consumed by Bitcoin miners. Diverging from fundamentals. If we take a close look, we can see how the price of Bitcoin may be diverging from these fundamentals. For instance, it is becoming less profitable to be a miner, especially as the energy required increases. At some stage the cost may exceed the price of Bitcoin, making the network less worthwhile to both mine and invest. Bitcoin may be the best known cryptocurrency, but it is also losing market share to other cryptocurrencies, such as Ethereum and Litecoin. Bitcoin currently accounts for 59.4% of the total global cryptocurrency market, but at the beginning of 2016 it was 91.3%. Many of these other cryptocurrencies have more functionality than Bitcoin, or are more efficient and use less energy. Government policy, such as taxation or the establishment of national digital currencies, may also make it riskier or less worthwhile to mine, transact or hold the cryptocurrency. China's ban on initial coin offerings earlier this year reduced the value of Bitcoin by 20% in 24 hours. Without these fundamentals, the price of Bitcoin largely reflects speculation. And there is some evidence that people are simply buying and holding Bitcoin in the hope it will keep rising in value, also known as greater fool investing. Certainly, the cap on the total number, 21 million, of Bitcoins that can exist makes the currency inherently deflationary. The value of the currency relative to goods and services will keep increasing even without speculation, and so there is a disincentive to spend it. Bitcoin still has room to grow. Many big investors, including banks and hedge funds, have not yet entered into the market. The volatility and lack of regulation around Bitcoin are two reasons stopping these investors from jumping in. There are new financial products being developed, such as futures contracts, that may reduce the risk of holding Bitcoin and allow these institutional investors to get in. But Bitcoin futures contracts, where people can place bets on the future price of stocks or markets, may also work against the price of Bitcoin. Just like gamblers place bets on horse races rather than buying a horse, investors may simply buy and sell the futures contracts rather than Bitcoin itself. All of this could lead to less actual Bitcoin changing hands, leading to less demand. Although the rush to invest is apparently encouraging some people to take out mortgages to buy Bitcoin, traditional banks won't lend specifically for that purpose as the market is too volatile. But it is not just on the finance side that the Bitcoin market is set to expand. More infrastructure to support Bitcoin in the broader economy is rolling out, which should spur demand. Bitcoin items are being installed in many countries, including Australia. Bitcoin lending is emerging on peer-to-peer platforms, and new and more regulated marketplaces are being created. Many companies are accepting Bitcoin as payment. That means that even if the speculation dies down, Bitcoin can still be traded for some goods and services. And finally, although the fundamentals of Bitcoin are still up for debate, when it comes to transaction volume through the network there appears to be a lot of room for growth. It's good to remember that people have been calling Bitcoin a bubble for a long time, even when the price was just $35 in 2013. In the end, this is uncharted territory. We don't know how to value Bitcoin, or what will happen. Historical examples may or may not apply. What we do know is that the technology behind most cryptocurrencies is enabling new models of value transfer through secure global consensus networks, and that is causing excitement and nervousness. Investors should beware. Bitcoin bubble warnings issued as futures trading opens in Chicago. first contract on a regulated exchange has seen a step towards legitimacy for the cryptocurrency, but volume traded as tiny. Bitcoin has taken a step toward legitimacy with the launch of a product on a Chicago exchange that allows investors to take bets on its price in the future. The new contract on the Chicago Board Options Exchange came as the digital currency jumped another 10%, sparking fresh warnings of a speculative bubble after last week's 40% climb in price. Bitcoin was trading at $16,200, up 10% on the day, while the new futures contract trading in Chicago showed that traders were expecting the cryptocurrency to be trading at even higher prices in January. The futures contract trading on the BO allows traders to take bets, or to protect themselves, on the price of Bitcoin next month. It started trading just before midnight in London on Sunday at $15,460. Hit a high of $18,700, and then dropped back to $17,800. Such was the price volatility when the contract launched that trading had to be halted twice through so-called circuit breakers, and that BO had to admit that its website was creaking because of the heavy traffic, although its trading platform kept working. The launch of the contract on a regulated exchange is regarded as a sign that Bitcoin is becoming more mainstream rather than currency associated with technology experts and even criminals. Daniele Bianchi, assistant professor of finance at Warwick Business School, said, although it has been thought of as a peer-to-peer payment system, it is evident that Bitcoin is gaining more and more legitimacy as an asset class. Today's launch of Bitcoin futures has the potential to add further momentum and thus increase the appeal of the cryptocurrency to both institutional and retail investors. Volume in the futures contract was low. According to calculations by Breaking Views, it was roughly $50 million, £37 million, less than 0.5% of actual Bitcoins. Bitcoin, created in the aftermath of the financial crisis as a way to avoid using banks, started the year trading at $966, and its meteoric rise this year has led to comparisons with a dot-com bubble in 2000 and the 17th century tulip bubble. One of a number of cryptocurrencies, Bitcoin is not regulated and is controlled by a network of computers that update all transactions which take place on a variety of trading platforms around the world. It only exists digitally and is mined using mathematical equations. But on Monday, a top central banker said the European Union should look at the possibility of regulating Bitcoin because of the risk of money laundering. Speaking in Vienna, Ewald Nowotny said, simply because of the scale, it is certainly increasingly necessary to discuss whether and in what form regulations are needed here. Nowotny, Austria's central bank governor and also involved in setting interest rates at the European Central Bank, added, a particular aspect that needs to be discussed is the question of how far the regulations on money laundering are relevant here. His remarks come after warnings from other senior bankers about the risks associated with Bitcoin. Last week, Howard Davies, chairman of Royal Bank of Scotland, had said the sign should be put up from Dante's Inferno, abandon hope all ye who enter here, while Jamie Dimon, the head of JP Morgan, has talked about Bitcoin as being worse than tulip mania and potentially used by a drug dealer, a murderer, stuff like that. As the new futures contract was launched, analysts at Swiss bank UBS said cryptocurrencies are a bubble. Paul Donovan, global chief economist at the Swiss bank's asset management arm, said futures on tulip bubbles were launched in 1636. The tulip bubble did not burst until February 1637. Bubbles are by definition irrational, said Donovan. Predicting when a bubble will burst cannot use rational analysis. Ignoring a bubble is the best course of action. About 16 meters Bitcoins have been mined so far, but there will only be 21 meters in total, because it is written into the currency at its source code. Another futures contract on another U.S. exchange is due to launch next week. Bitcoin bubble warnings grow louder as futures trading begins on CME, as it happened. All the day's economic and financial news, as cryptocurrency Bitcoin joins the world's largest exchange. Closing summary, Bitcoin futures fall as CME trading begins. Time for a recap. Bitcoin has made a subdued debut onto the world's largest futures exchange, as a series of politicians and officials voiced concerns about the digital currency. The Chicago Mercantile Exchange, CME, became the second exchange to offer Bitcoin derivatives trading last night. And right now, Bitcoin futures contracts which settle in 2018 have all fallen below their opening value. The January 2018 contract, which initially spiked over $20,000, has now dropped back to $18,920, having been originally priced at $19,500. Contracts that mature in February, March and June are all in the red, although they've received little attention compared to the January option. Futures contracts allow traders to bet against an asset, so today's moves could suggest that Bitcoin's stunning rally is running out of steam. But, less than 1,000 contracts have been traded today. Each one is worth 5 Bitcoins. The spot price of Bitcoin has also dipped, currently down 1.6% at $18,640, having hit a new all-time high near $20,000 last night. Kami's launch of Bitcoin futures was accompanied by a series of warnings. NG cited Bitcoin's volatility, scalability issues, and the shadow of regulation among several reasons why it would not replace traditional cash. So those buyers who are hoping to sell their Bitcoins at an even higher price in the future may be disappointed. They say, "We are enthusiastic about blockchain technology, and the current attention for Bitcoin could boost blockchain and digital currencies development. But as we have argued above, we doubt whether Bitcoin itself has what it takes to become a serious mainstream payment systems contender. Instead, we think it is more likely for Bitcoin to return to its roots as a niche payment system. A niche asset adopted worldwide could still have a substantial user base and hence value. It is therefore impossible to say whether the current Bitcoin market price is too high for a niche asset." Then again, we join the crowd of analysts observing typical bubble characteristics. The idea of an asset that is new, revolutionary, almost magic, hard to understand, but let's invest anyway because it will become huge. This idea is a form of "this time it's different" thinking. Yes, we know about all those previous bubbles that popped, but Bitcoin is really, really different. We are not so sure.